Hello, and welcome to Donutian Investment. This analysis is for C on the New York Stock Exchange as of 7th of August 2026 with a share price of $111. The full report is on donutian.ca. A high-quality, three-engine emerging Asia platform, Shopee, Garena and C-Money, now profitable, but expensive at $111, approximately 34 times earnings versus a 24 times sector guardrail fires the valuation ceiling gate and caps the call at hold. Q2 earnings land in 4 days, a binary print, so wait for it or a pullback. Start with the quality because it is genuinely high. C runs 3 connected engines, Shopee in e-commerce, Garena in gaming, and C-Money in fintech, and the flywheel between them is real. Shopee's transactions feed C-Money's lending, Garena's cash funded the build-out. Revenue grew 47% year-on-year in the first quarter to $7.1 billion, and the group has now strung together 4 straight profitable quarters with an operating margin above 8%. The balance sheet is a fortress, about $12.8 billion in cash, $5.49 of free cash flow per share. Growth plus cash flow puts it on a Rule of 40 score near 60, top tier, quality scores 76. Here is why the call is a hold and not a buy. C is now profitable, so its price to earnings actually means something, and it is rich. The stock trades around 34 times earnings, and because C is classed as consumer discretionary retail, the sector guardrail says a rich multiple starts at 24 times. 34 against 24 is a ratio of 1.42, past the 1.4 line, so the valuation ceiling gate fires and hard caps the signal at hold. Valuation scores 38, expensive. The forward multiple is about 30 times, the PEG a fair 1.06, and the free cash yield about 5%, so this is not absurd, but the recent bounce removed the cushion. The street's consensus target is $133, but the price has run ahead of the fundamentals we can conservatively support. The tape is much better than the last report, which caught C below a falling 200-day average. The stock has bounced about 15% off its late July low, reclaimed the 200-day, and 4 of 5 timeframes now point up. Timing improves to 52, neutral. But 2 things say, do not chase it here. First, the bounce has run straight into resistance at $116, so there is no room and no volume breakout. Second, and bigger, Q2 earnings land on the 11th of August, 4 days out, and C routinely gaps 10 to 16% on a print. No entry path is open. The conviction ladder reads, wait. This is a business to own on weakness, not a position to open at resistance the week of a binary result. The risks carry equal weight, and they are why this is a hold. The bear case sees the stock fall to about $84, roughly 24% below today, and it is weighted a full 28% because the trigger is close. The nearest is the print itself. Q2 lands in 4 days, and a disappointing result on profitability could gap the stock 10 to 16% lower overnight, a move you cannot manage once you are in. Structurally, TikTok Shop is gaining share fastest and can force Shopee into higher incentives that compress its take rate and margins. Temu is largely blocked in C's core Southeast Asian markets, but pressures the Brazil leg. C-Money's loan book adds credit cycle risk if an emerging market downturn lifts defaults. And the macro backdrop is a headwind. Consumer discretionary and emerging market equities both read underperform, and a firm dollar taxes the currencies C earns in. These are live risks, not distant tails. Now weigh the risk against the reward. The bull case is roughly 46% above today, the base case, the most likely, about 13%, and the bear case, a fall of about 24%. So you are risking about 24 to make 46. So, our call on C, on the New York Stock Exchange, hold. Remember, this is for education, not financial advice. Always do your own research. This analysis is by Donutian Investment at donutian.ca. The link to the full report is in the notes below. Have a great day.